Welcome back to Xchange Rewind, where we're looking back at 2014. Oil prices went on a heck of a ride this year. Oil opened the year around $93 a barrel. It hit nearly $105 over the summer, and then, well, the wheels came off. It has been on a steady slide since, closing as low as $55. Sean Brodrick is an analyst with InvestmentU.com and the Oxford Club, and he joins us now by phone. Sean, thank you for joining us here on Arise Exchange.
Thank you very much for having me.
Boy, did this slide in oil just catch everyone off by surprise? Anyone predict this?
Well, certainly at the very start of the year, no. But as things went on, we saw more and more production coming from North America. We saw Iraq ramping up its production. We saw Libya coming back online. Then people started to, say, you know what? We're really going to have a surplus of oil. Then we had to change our bets in the market.
So the question is this a supply problem or is this a world economy problem? Because that's where really the argument is.
Right. That's an argument that I'm having with a lot of people. Some people think that the wheels are coming off the global economy. I strongly disagree. This is a case where we have new tech that has changed the game in how much oil is supplied, and so we are seeing surging supply in North America, in Africa, in even the Middle East. We're seeing more supply come on.
Yeah,
so that's really changing the game.
You mentioned new tech, and I guess we're talking about fracking to some extent. That is clearly a game changer, right? It has come on in huge numbers and really driven the price down.
Yes, that, but also people really don't understand the whole fracking technology improves all the time. It becomes cheaper and cheaper to frack. Plus, there's new technology coming on, like, say, nanotechnology. That, again, will make things cheaper. So we're going to have this play out over the course of the next year. My forecast is we'll see lower oil prices through at least the middle of the year. Around the middle of the year, I expect I'll have to reassess. We are starting to see new projects canceled. Mm-hmm. Nobody's canceling existing production. And even if new projects do not come on, U.S. oil production is expected to rise through next year.
Yeah, is there, that's a good question, because some people have said that with the substantial drop in oil, now the U.S. can't support the drilling that it's doing here. Do you buy that?
In certain places, yes. In fact, we are seeing projects canceled up in Alaska. We are seeing projects canceled in, for example, the Tuscaloosa Marine Shale. Projects are also canceled there. However, I've been reading some stuff because one of the projects I thought would be canceled would be up in, say, the oil sands up in Canada. But I've been reading about the lifting costs they have there, and they're a lot cheaper than you might think. So I think everyone's playing this game of chicken, waiting for the other guy really to, blink first. People expect at, some point, Saudi Arabia will have to cut. They have lower costs than anybody. They aren't going to cut. They're going to wait for us to cut.
Yeah, they said today they don't mind if oil goes down to $20 a barrel, and that's the game of chicken, because it's not so much which country may cut production first, but here in the U.S. it really comes down to which company might cut, correct?
Right. That is a very good point, because it is all very different depending on what oil field you're in. Some have much higher costs. So what you should concentrate on are those companies that have A, low debt, it's very important, B, a cash flow, and C, low lifting costs. Those companies are really being beaten down right now. They're all being thrown in the trash, right? But there are some real bargains there that longer term should do very well.
Yeah, and for the overall U.S. economy, how much did the low oil prices sort of factor into that pop we saw in the GDP?
I think that really factored a lot. People do not want to give people do not want to give the current administration any credit, but they really stood out of the way and let things happen in the whole oil industry. And we saw exports of oil fuel and stuff like that zoom. We've seen industries around the U.S. that use oil as an input really take off. We have seen the consumer have much more money in their pockets. This is a thing that low oil is really helping. And so, again, at least through the first half of next year, things could be pretty good.
Okay, Sean Brodrick, an analyst with InvestmentU.com. Have a good new year, and thank you so much.
Thank you.